Hello friends, this is Raj Sastry from Raj Option Trading. Today is February 5th, 2023. Hope you're all doing well. In today's segment, we'll take a look at most beaten down stocks and how to benefit from it. Look, when you buy most beaten down stocks, if you really select them well, you can make a good profit because they typically bounce back, especially the good ones. So with that, let's jump in and get started. Look, we got here S&P 500. S&P 500, as you can see here, had a nice run. So right now it's wondering where to go. And same story, we got tech heavy Nasdaq. As you can see here, look at the rally in Nasdaq, which done great. Now it's wondering where to go. And look, we got Bitcoin. As many of you know, Bitcoin is trying to see where to go, searching for direction. And you got US dollar. Look, US dollar is getting strengthened, as you can see here. That's a little bit not so great sign for stock market. So with that, let's look at a little bit bigger picture and see what's going on, where we can go from here. So with that, let me take you to fear and greed index from CNN. Look, from a fear and greed index perspective, we're in extreme fear right now. The moment you're in extreme greed, the moment you're in the extreme greed, this means people are really risking money and buying these speculative assets. This is when you got to be careful. Typically the pendulum swings back to greed and probably back to neutral. So that's why you got to be careful especially when you buy these very risky stocks. Be careful, because when you're in the extreme greed mode, market will take you to correction mode, which is either greed or neutral. So that's why you got to be careful. So that's why play safe when you buy these beaten down names here. Look for good cash flow and also profitable companies. That's one way to make money. So with that, let's jump in here and look at the futures. Look, from a futures perspective, we got cnbc.com here. Look here, we got futures. Dow Jones futures down 66, S&P 500 futures also down, Nasdaq futures also down, as you can see here. Oil is creeping up, as you can see here. Interest rates are sticking up, so that's not so great sign for the stock market. So with that, let's jump back into Tradingview and look at how to look at great stocks. Look, I'm in the Tradingview. I will take you to my filter here. So look, I got here my fundamental layout here. So as you can see here, I selected few columns that I want to see here. We got performance, we got 52-week low, change, and so on and so forth. You know, one thing with the Tradingview, it gives you a lot of layouts. You can choose what you want to see. So as you can see here, I selected few columns here, and look, I got various layouts here. I got support, resistance, ETF, technical analysis view, exponential moving average, performance, and so on and so forth. Because Tradingview has got a lot of these columns, we should make use of it by creating this layout so you can play with it. So we'll go with my fundamental view here. We can flip back and forth into other views as required. Next is the most beaten down here. Look, I got a screener here called most beaten down dash profitable. So I want to look at most beaten down stocks which are profitable. Look, my criteria is simple here. Look, I want my symbol type very simple here, closed-end fund. I could even remove the closed-end fund here. Look, common stock, ADR, which is really foreign stocks, preferred stock. I could even remove the preferred stock here, not interested at this time. And we could go into REIT. REITs are good to look at. I could remove this structured and trust fund here, probably not worth our money here. So we can go with this criteria here. And look, that's the symbol type here, and we got price. You know, when you're looking at these great stocks here, typically for the long term, Always look for double-digit price more than $10, so that way you're not looking at risky assets and buying them, especially when you have a little bit longer term time frame. And price to free cash flow here, I'm choosing it above 0. I want free cash flow positive companies. And look, we got gross margin here. I want the gross margin to be above 30, so I want these profitable companies. And I got here net margin also above 0 here, so I want net margin profitable companies. If I want to be a little more selective, I would even make it 5%, so that way I look at a few more good stocks here. And look, important criteria, look at my relative strength index or RSI. I want the RSI to be below 50, so that way I know these stocks are beaten down big time. And look, we got quick ratio. Quick ratio is above 0.7. That means these companies they have enough enough assets to cover their liabilities. Typically I would do above 1, but I said 0.7 because some great companies like Apple, they got a little bit lower quick ratio. That's why I chose 1 here. So even if I want to really look with this criteria, I got 79 tickers selected here. So you want to tighten this up a little bit, I would even go to average volume in say 60 days or even 90 days for that matter. I would say 500 K here, so that way I don't look at one hit wonder here. I want some companies which are really doing well on an average 90-day volume basis. Look, we got 74 tickers here, which is good enough. And let's quickly look at these here, and we can even tighten it up further. All right, I will just close this, and I could go here and save my filters as most beaten down profitable names here. Look, we got 74 companies here. Top of the list, we got Coca-Cola, one of my favorite stock here. Look what's going on with Coke, down down 0.75%. Year to date performance down 5%. Basically money is going into the risky assets and money is going out of stocks like Coke. They're using stocks like Coke as a source of fund and taking the money out from these safe haven type stocks here and going into risky assets. That's what's going on here. And look, we got RSI here. Look at this RSI, relative strength index in 14 days, 37. Look, relative strength index in 7 days is 32. That tells you this stock is getting beaten down. And you could look at other criteria here. I got here gross margin, very nice, I like it. Companies making money. Look at that net margin, 23%, great. And performance perspective, look, stock is getting pummeled here. Look at that ugly performance all the way from weekly to yearly, all negative. So that's why you got to be slightly careful. I like it here. I'm slowly buying some Coke for the long-term portfolio. Typically it can bounce back. It's a safe haven type name, really good for diversification. And next we got AbbVie here. I like AbbVie, it's a great name. Off late it's coming down mainly because one of its drug, famous drug, is really going out of patent. That's why stock is coming down off late. But look, it's trying to go higher slightly, so it's a great stock. I would recommend looking at this one also. And as you can see here, performance on a yearly basis is down 10%, as you can see here. And as you look through here, RSI perspective, this one is getting beaten down big time. On AbbVie, I would probably recommend you to wait slightly because there are a lot of news about its patent going out, and generic drug makers can really use its formula. That's why stock is coming down here. So you got to be slightly careful. But I would slowly start buying names like AbbVie, which are completely beaten down. It's a great name here. And then you got PepsiCo here. If you were to choose between Pepsi and Coke, anytime you could go with Pepsi. Pepsi is a better bet here. Look, it's also weak. Look at the RSI levels here, slightly weaker. I would probably choose Pepsi over Coke. And then we got a few more here. Look, we got great industrials here, all the way from Honeywell, Caterpillar, Deere, and so on and so forth here. I would probably go with the stock like Caterpillar here. It's a great one. Even Deere is a good one here. And we got steady Eddie stocks like ADP, a great stock here. And look at that RSI here. From an RSI perspective, this one is getting better. Look at the RSI 7-day and 14-day. It's almost at the same time. That tells you this can go higher. It's got beaten down enough already. And we got a few more as you can scan through here. This is a list here. And if you want to tighten this a little more here and look at stocks which are ticking up slightly, you could go into the filters here. And as you can see here, we got RSI 14-day. As you see here, we got RSI 14-day below 50. And you could also do one more thing here. We could select relative strength index here. And this time, instead of 14 days, go with the relative strength index 7 days here. And you can say 7 days, you can say between here, and you could say here 50 and 55. So this tells you want the stocks that are beaten down but improving. Now what you're saying is, I want the RSI to be below 50 and the RSI 14 to be below 50, but RSI 7-day to be above 50. This is where stocks are improving. So you could go with such criteria here. You can tighten it up further. And let's see here. Look, we got a very small set of stocks here. You could look at these names here. Look, we got Emerson here. Emerson Electric is a great company here. And look, it's RSI 14 days 47, but RSI 7 days 52. It's improving right now. So instead of catching the falling knife, you could buy stocks like Emerson here just by looking at the RSI 14-day and RSI 7-day. RSI is improving. You could go with that. And I got Williams Companies, again a great one here, energy company like many of you know here. You got Halozyme, BTU, and TWNK. You could look at such names here. As you can scan through here, you got a great criteria here, and you could look at criteria here. We got here gross margin. Look, we got both gross margin as well as net margin. All these companies are making money here, so not a reason for any concern here. So you could look at such names here. And I also look at many of these stocks here. I look at Tradingview, Finviz, bar chart, Fintel, many of these sources here. I bring them into a spreadsheet here. I will take you to my spreadsheet. You could apply similar criteria here. All right, so look, we got total, we got a lot of stocks here. We got total 2,800 stocks in this list here. So what I could do is I could go here and do a range and filter, and I would do something similar like what we've done in the past year. I want the price to be about $10. I could go here and say greater than or equal to $10. So we will be filtering down, as you can see here. All right, so we got our list here is down to 2019, as you can see here. And next what we would do is we would go into the RSI here, RSI 14. We want this to be below 50. I could say here less than or equal to 50. So we are looking for stocks which are beaten down, as you can see. And now we are down to just 397, as you can see here. And now we will go into our criteria here, and I want to make sure the gross margin is about 30. Let's go in here and say greater than or equal to 30%. All right, so that's also set here. Now we are down to 245 stocks, as you can see right here, and we want net margin to be above 5%. I would go here and say greater than or equal to and 5%. All right, so we got let's see here 5%. There you go. So now we are down to 185 stocks here, and this is a good list, as you can see here. And we got our analyst recommendation. For example, you don't want any stocks which are not recommended by analysts. You could go in here, and I would say analysts recommend either buy. I don't want any sell here, so I would just go something like this here, buy. Let's take this off here. There you go. Let's say select all. All right, I want buy, and I want strong buy. There you go. Look, these are the stocks. Now we're down to 131. These are buy or strong buy. And looks like for example, technical rating, don't worry too much here. Many times when the stocks are beaten down, especially when the RSI is low, we'll go into the technical rating, which is sell. So don't worry too much about this technical rating at this time here. And we got insider and institution here. Typically you want institutions to have good coverage. Look, we got stocks like Future Chinese stock, as many of you know here. Look, institutional ownership is a little bit low here, so I would even look at a little bit higher institutional ownership here. I would go in here and say institutional ownership and say greater than or equal to, maybe say 40% is a good number here. I would just go here and say 40%, and it should bring down the list nicely here. We got 121 names, as you can see here. And then we could go into current ratio here. I would say current ratio greater than 0.7 like we did earlier, or less, greater than or equal to 0.7. Greater than is good enough. All right, so now we got 91 stocks here. Great. So you could look at these names here. Great stocks here, doing very well, and all gross margin positive, net margin more than 5%. Hey, why 5%, you might ask? Let's go and say net margin greater than 10%. So that way we can look at some good names here. All right, so let's look at 10% net margin. Look, we got 69 stocks, all great stocks here. Look, from a RSI perspective, these are all beaten down here. Look at the RSI here, and you could do same thing here. You could even do little criteria on the RSI 7. For this, I will leave it as it is. And I know many of you like to trade options. That's why, look, we got IV rank here. This IV rank is from barchart.com here. So by looking at the IV rank here, for example, you might sell some look, IV rank is very high right here, ALE. And you could also look at option open interest. Look, option open interest is 167. So this is where you got to be slightly careful here. If you're an options trader here, I would not go in and sell options, because look, option interest is very low here. This is not for the option sellers. And if you want to, if you're in the options game here, I would say look at the option open interest here. Say more than at least 100,000. That's a good number. You could even bump that up here. So let's go in and say 100,000. All right, so now we are down to 17 stocks here. So if you're an options trader, look for the open interest, higher the better. Look, we got Activision Blizzard here. These guys are, might be acquired by Microsoft. Look, there is a very nice option open interest here, and option volume is pretty healthy here. It's getting a little bit positive here. Look, RSI 14 days 46, RSI 7 days 42, and look, put call open interest ratio is 1.30, but put call volume ratio is 0.81. That tells you it's getting better. On Friday here, more call options are being bought than put options. That's typically a good sign here. You could go in and probably look at this stock here. And as you look through here from a IV rank perspective, look at that IV rank here. You could even sell some put options way below and make some good money here. Look, only thing is, look, today is February 5th, but look, earning is tomorrow, so that's why you got to be slightly careful. Look, we got earnings tomorrow, so you could go all the way down. Volatility is super high just before the earning. You could go all the way down, below 75. Look, we got support resistance level right here. Look, we got support level here. Let's see, support 1, 2, 3. You could go to support level 3 here, and even below this you could sell some put option, make some good money, take advantage of this high implied high IV rank. And we got a few more. Look, keep watching the IV rank here. We got Enphase Energy, one of my favorite energy name here. So you could click on Enphase Energy, and look, it's a nice buy from an analyst perspective. Look, from a RSI perspective, stock is sold off big time here. We got RSI right here. Let's see. From a RSI perspective, stock is beaten down. Look, RSI is 39 and RSI 7 days 30, and IV rank is look for Enphase. Actually, it's getting better. Look, RSI in 14 days 40, RSI in 7 days 46. That's getting positive. High IV rank, and earnings is on Tuesday next week. You could take advantage of this one also. Sell some put option way below current stock price. You can go in around, say, S3 here, support level 3. Currently stock price is at 222. You could go around support level 3 or 2 for that matter, and sell some put option, make some good money. If your account size is lower, you could also sell some put spread, around this area here, maybe $5 wide spread or $10 wide spread around 159 or so, and make some good money here. And if you want to buy some call options here, always look for RSI level lower. These are all RSI level lower. You want to make sure IV rank is also low when you want to buy call options, and you want to make sure the option interest is pretty high. These are all nice and high open interest. And you could look at some names here. Look, we got some of the energy names here. EOG, look, it's a strong buy recommendation here. I like this company here. IV rank is high for EOG. Earning is coming up around the corner. This one you could sell some put option way below. That's a bullish strategy. Look, we got support level 2, 114. You could even go around support level 3, sell some put option. You can make some money with the high IV rank here. And for the folks who want to buy call options here, look for low IV rank here, and you don't want to go after huge dividend paying companies. Instead, you want to go for some growth names here. All right, so we got look, AbbVie is beaten down big time here, and look, RSI is 31. You could you got to be careful with this. If you're buying call option on AbbVie, go a little bit longer term, maybe 6 months out, or you could buy stock slowly. It's a great name here. And you got PFE, one of my favorite stock here. With all the COVID-19, the stock went higher, but now it's coming down to earth. If you're a long-term buyer, buy some PFE or Pfizer. You can never go wrong with this name here. Look at the option open interest, great open interest here. And look, from a IV rank perspective, it's very low. It's dirt cheap at this level here. You could you could buy some Pfizer, put it in your long-term portfolio. It pays around 3.70% yield or a dividend. It's a great name here. And you got Merck. Merck went higher for a while. Now it's also down to earth. Look at the RSI here. From a Merck perspective, RSI is let's see here, 32 here. And it's a great one here. Stock came down big time here. You could buy Merck. It's a great name here. You could buy Merck. And one of my favorites is Eli Lilly here, LLY. Look at that RSI here. Eli Lilly RSI is 41 in 14 days, and RSI is 41 in 7 days. And earning is a little bit later. You could buy this great name here. Put it in your 401k or long-term portfolio. Great name here. And last but not least is J&J, one of my favorite stock. It's getting better, as you can see here. RSI 14 days 33, RSI 7 days 34, and J&J, as you can see here. Let's see. J&J, look, it's a great stock here. We got nice price target 17, say buy. So it's a good one to buy, beaten down at this time here. I would look at this one also, and look at that IV rank here 21. That tells you could even buy some call options in J&J. Pays nice dividend, as many of you know here. Look at, let's see here, dividend. Yeah, dividend yield is 2.8%. It's a good one here. So you could look at that one also here. Great one to buy. And if you're If you're into energy names here, look, all these energy names are down to earth here. CVX, which is Chevron, ConocoPhillips, all down big time here. You could take advantage and buy these strong buy type candidates given stock is beaten down big time. So with that, thank you very much. Happy investing and trading. Always try to buy some great quality names which are beaten down and sock it away in your little bit longer term portfolio, or even for swing trading. You will do great. Thank you very much. Happy investing and trading.